Welcome back to Intelligent Investment Today, the podcast concerned with all things value investment. In each episode, we take a look at a different subject from the financial landscape and attempt to apply the rules as laid down by the father of the craft, tutor and mentor to superstar investor Warren Buffett no less. We're of course talking about Benjamin Graham. In this episode, we consider the helter-skelter ride that has been the financial markets over the last couple of weeks or so, attempting to make sense of what's been going on and trying to draw some conclusions as to what this might mean for stock markets and investors going forward. So without further ado, let's dive right on in. As ever, sit back, buckle up and get ready for another lesson in value investment as inspired by the man himself, Benjamin Graham. It was not my intention to do another podcast on the psychology of markets and of investors so soon after a similar recent podcast. However, I feel it would be remiss of me not to make comment on the wild ride we've all been subject to as a result of what is brewing into a full-blown trade war. Serious times are these, as Yoda might say, but not totally without precedent. Anything that threatens to tear up the long-established way of doing things is obviously going to create great havoc to businesses and to economies. And while we do not know exactly how this might play out and how quickly they might be able to adjust to the newfound reality, this clearly causes a great problem from the viewpoint of investors. The less predictable is the future economic landscape, the more difficult it becomes to draw conclusions as to what price should be paid for shares of businesses. It is impossible to talk specifics here as to what the future holds, partly because economics works in unpredictable ways, and partly because every time you turn on the news, the goalposts are shifting one way or another. All that we can say with any certainty is that all we know is that we don't know how this one is going to pan out. In light of this fact, all we can do as investors is look to the past for solace. In my time as an investor, I've lived through three real biggies before this latest moment of peril. The dot-com crash of the early noughties, the 2008 financial crisis, and the pandemic-induced crash of 2020. There have been others, of course, but these for me are the ones that really stand out. Where this trade war ranks in relation to these, we do not yet know. But what can be said is all these examples left investors with little idea of what the future held for markets and the economy more generally. Investors were just as panic-stricken then as they are now, but every time stability returned, and this normally happened sooner rather than later. Markets do seem to have this phoenix-like quality to emerge from the ashes of the latest disaster. There are no guarantees with these things, but I suspect it will do so again. So what are the likely ramifications of this upending of the rules of global trade? My guess is probably as good as yours, but I foresee an outcome whereby the preeminence of the US stock markets are challenged. For the best part of 2 decades, US stocks have by far outperformed those of most other international markets. A major part of this has been the rise of the tech stocks. But it has been a rising tide that has lifted all boats. The fallout from this has been the understanding that this outperformance is to be of the permanent order. Of course, this being something of a self-fulfilling prophecy. This has left many other international markets unloved and overlooked, resulting in some serious undervaluations. The reasons this state of affairs could be about to change are multifaceted. If the current feeling that the United States wishes to go its own way and become increasingly isolationist, as is its right to do so, then it's not hard to see why investors, especially those outside of the US, might look to other markets to park their capital. If the US no longer wishes to take on the mantle as the global epicentre of international trade, then it seems inevitable that at least some sheen will be removed from its trading indices. This will surely make more free trading economies appear comparatively more attractive. This is not to say the US markets do not have a bright future ahead. It is simply stating that at risk is its reputation as the equity market par excellence, which could work out to the advantage of other global markets. Another potential consequence of a more isolationist United States of America is that this will surely force the hand of other trading nations to detach themselves from the reliance on the very thing the US does best. I'm talking of technology. That might be military assets, computing hardware, AI or satellites, to name just some of the sectors where the US stand head and shoulders over most of the rest of the world. These items are a non-negotiable necessity for the strength and security of any nation, and put quite bluntly, if there is any suggestion whatsoever that the US could, in the future, become an unreliable supplier of these items, then the rest of the world will need to create their own alternatives. A sudden influx of investment could do a lot to make once unloved indices suddenly become flavour of the month. Yet another reason why alternative international equity markets could become a more attractive future destination for capital is simply down to diversification. For a long time, many investors have been all in on the US markets. If the risks related to a single economy increase, then investors may decide to mitigate this risk by spreading their capital across multiple markets and economies. So what can we say about the future for equity markets and the global economy more generally? I'm not going to pretend to know how this is going to turn out, but history has shown that markets and economies are more resilient than we sometimes think. These are tough times to be an investor, for sure, but we've been here before, quite recently in 2001, in 2008, in 2020, and at other points. None of us had any clue what was going to happen then either. But somehow the markets came back stronger, and we can only hope that history once again repeats itself. I once asked Sir Tony Blair, the former UK Prime Minister, what he missed most about being PM, and his answer took me by surprise, but perhaps it shouldn't have done. He said, when the country's in a really bad crisis, that's when you actually miss the job. You don't miss it when everything's running relatively smoothly. And that got me thinking that in a perverse sort of way, that's also how I feel about being an investor. There's no doubt about it that times like this are hard, really hard, but it's also what makes the endeavour really worthwhile. Being a value investor who have a tendency to buy shares and then hold them for a very long time can in actual fact be quite a mundane pursuit. We don't have the same hands-on approach and therefore the drama of those hoping to make money from trading shares. Times of economic turmoil might very well be the only action we ever see. And besides that, it's certainly useful every now and again to prove to yourself that you've still got it. I mean, it's all very well and good saying that you've got this will of iron to keep calm and carry on when the poop really hits the fan. But as is always the case with these things, the proof of the pudding is in the eating. And it's sort of gratifying to know that you are still able to keep your head when all others around you seem to be losing theirs. So if ever I do give up this investment game and donate my copies of The Intelligent Investor and Security Analysis to the local thrift store, it will be these really tough moments that I look back on with a sort of misty-eyed affection, even if things won't be quite as you remembered whilst being in the eye of the storm. My advice, therefore, is to hang tough and remember in financial markets, as with everywhere else, typically the more things change, the more they stay the same. When the going gets tough, the tough get going, as they say. Remain resolute, remember Graham's parable of Mr. Market, and I'm sure this storm will blow over. That's all for today, folks. I hope that you're all managing to stay strong, and I'm sure we'll soon enough find a brighter day. If you've enjoyed the podcast, please do add to playlist to avoid missing any future editions, and do continue to spread the word. It really does make a huge difference. Stay young and beautiful, and remember a good night's sleep is more important than how any index did today or might do tomorrow. I'm David Coombs. This has been Intelligent Investment Today. Until next time, stay safe and happy investing.